Hello traders, welcome back to the channel. Welcome back to another video. In this video, I'm going to be taking you through a step-by-step analysis of our strategy, Tricon strategy on EuroCAD. So stick around to the end and then you can learn how to analyze the market my way. Yesterday we had I'll call it a session on how to teach you how to analyze the market using our strategy. And I must say, I'm so happy people were appreciating whatever I did. It was free of charge, just like I had promised last month. So I'm hoping to have another one. I don't know when, but I'll be communicating in the group. So join my Telegram group if you have not yet joined. I'll be communicating when we should have another one. This month I'm going to be conducting those lessons throughout. They are going to be free of charge until the end of the month, and then if you want to know how to trade, you can also reach out to me and then you can be able to do that. We also talked about my book. People said it's so expensive at $30, so we are going to revise it for $10. People who are already subscribed to the channel, the first 1,000 subscribers, and then $20 is going to be the final price for everybody. It is not going to go beyond that one. So also the mentorship is $150 for people who are not subscribed, and the subscribers it is $100. And that one also will only work for this month, I think, and next month. Beyond that, be 150 constant. So we are going to go through this. I'm going to be taking you through a step by step, so stick around such that you can know how to analyze the market. If you don't know how to analyze the market, this is going to be your video. If you don't know how to trade, how to know the direction of the market, if you don't know anything to do with analysis of the market, I'm going to give you a simple and clear strategy. So stick around such that you can learn this. So let's go for it. Also guys, don't forget to subscribe to the channel. Kindly subscribe and be part of this amazing trading community. Also, whenever you have learned something from the video, do not forget to like the video. So let's go for it. So on the screen, this is EuroCAD. EuroCAD, this is the 2-hour time frame. And guys, as I told you earlier, the first thing you want to do when you go to your charts, when you go to a live open chart like this, there's nothing you're seeing there. I know you can look at this and see this is an uptrend, but remember it only came and reacted from this zone and then dropped. So the first thing you want to do when you go to an open chart, you want to go to your highest time frame, the highest time frame you can afford. I think what I'm going to do, I'm just going to type those rules somewhere such that you can follow. And that's how you should know about trading, is that you must have a consistent rules pattern that you're able to execute over a long period of time. So I'm just going to type it here such that you can all follow. So the first thing you want to do, let's say this is number 1. You want to go to, okay, let me just say go to your highest time frame. Go to your highest time frame. That is the first thing you want to do when you go to the charts. Now the second thing you want to do when you go to your chart is that you want to identify structures on your highest time frame or map out your support and resistances. So I'll just do this too and then say mark your structures or support and resistance or demand and supply zones. Let me just extend this side, or demand and supply zones. So you want to mark out your support and resistances or demand and supply zones or your market structures that you see on that highest time frame. Then the next thing you want to do after that, you're now number 3, you're going to drop down to the lower time frames. This is drop to lower time frame. But now in this case, we shall drop down to the medium time frame to see what the market is doing, what is the actual trend of the market on the medium time frame. After you have done that, your support and resistances on the high time frame are going to help you on your medium time frame to know where the market is going to turn around, where the turning points of the market are going to be. But this is going to help you after you have marked out your structures on the high time frame, and now on the medium time frame, your support and resistance, demand and supply are going to show you where the market is going to turn around from, because remember, the market respects demand and supply, support and resistances. So the market respects these zones, and when it is moving from the daily demand, it is likely to go to the daily supply. If it is moving from the daily support, it is likely to go to the daily resistance. So now when you understand that, that is going to give you something we call the trend, because if it is moving from support to a daily support to the daily resistance, that means on the lower time frame, like the 1 hour, 2 hour, 3 hour, 4 hour, it is going to be a full trend. So you're only going to be looking for buys from the daily support to the daily resistance, only looking for buy zones, buy zones, buy zone, buy zone. And how do you look for these buy zones? You use demand and supply. So you only buy, now if you're buying, you only buy demand zones until when you reach the daily resistance. That is now where your take profit is going to be. That is where your trend is going to end. And then you look for confirmations that are going to take you down to the daily the daily support if you have reached resistance. So the third thing you're going to now need is you have dropped down to the medium time frame. The fourth thing you're going to need is to see something like a confirmation that now you should go down to the lower time frame and start looking for setups or entries there. So you need to get a confirmation from the medium time frame. It's medium time frame, MTF. Oh guys, good. So you need to get confirmation from the medium time frame. And what is that confirmation? You need any particular indecision candle at support or resistance. For example, you have gone to the highest time frame, that is, let's say the weekly. You have marked up your structures on the weekly, demand and supply, support and resistance. Then you drop down to the medium time frame. This is how you use the different time frames, guys. When you drop down to the medium time frame, you're looking for an indecision candle at either support or resistance or demand and supply zones. So when you get that indecision candle or indecision candles, that is now the time you drop down to the lower time frame. Let's say our entry time frames, 4 hour, 2 hour, 1 hour, even 3 hours. Sometimes I use it. So when that is now when you drop down to your lower time frame. Let me say drop to lower time frame or entry time frame. So now when you drop down to the entry time frame, this is now when you're going to be looking for structures or demand zones to start buying. And me, what I consider as entry trigger, as a good entry trigger, one, I'm going to, what should I do here? Okay, let me open another box. So now that the set of rules are there, so I'll just open another one down here and show you what I consider as entry triggers when I go down to the lower time frame. So my entry triggers would be: one, chart patterns. And those chart patterns are, let me just make this clean. So I want it to be in the middle. So these chart patterns can be can be a head and shoulder, or inverted head and shoulder. Then we can have double bottoms, double tops. So I'll just say double bottoms stroke double tops, or triple bottoms, triple tops. But then for the double bottoms and double tops, I trade them with the break of the neckline. For the head and shoulder, I don't need any confirmation or break the break of the neckline. I just enter there and then I'll be showing you shortly. But for the double bottoms or double tops, I need a break of the neckline. The head and shoulder can also be an inverted head and shoulder, so it is either way. So the next entry trigger that I always consider, this is number 2, is supply and demand. So I'm just going to type here supply and demand. So how do I use supply and demand? I just need to see a change of character and then a break of structure. Then I look for supply zones to the upside. Then whenever a structure breaks, I look for valid supply zone and then I enter. These are the only things that I consider when I'm going to execute or when I'm looking for my trading opportunities on the charts. If I do not see the things, I'm not entering any trades. If you follow this strategy step by step, then you have a trading plan that you can execute over and over again. So this one is also going to give you stop losses and take profits. I told you the take profit, of course, obviously this is for swing trading. The take profits is going to be on the opposite zone. If we're on the daily support, take profit should be on the daily resistance. But remember, you have always to take partials with trade management. If you're on the daily resistance, the take profit should be down at the daily support. It doesn't matter how long price will take to reach there, but as long as you know the direction of the market, you are always going to be safe. So this is a guided, simple step by step. You can take a screenshot of this and then try to follow it and see what it can give you. So now after showing you this, I'm going to take you to the charts and then we break down these charts step by step and you see what we can achieve. So now you have come to the charts and this is your 2-hour time frame. This is euro card and you want to look at euro card and see whether you have an opportunity or not. The first thing you want to do is what we have here. Go to your highest time frame. What is my highest time frame? I told you guys my highest time frame is the monthly. However, I only use the monthly when the month has just begun, or I use the monthly when the month has just ended, to look at the previous candle and see the previous month's candle and see how it closed. Was it an engulfing candle? Was it an indecision candle? Was it a Marabos? Anything to show me how the month ended, and that will give me a narrative of what might happen in the coming month. And as you can see, today is 2nd of November. That means when I'm going to analyze my markets today, I'm going to be looking at all the previous month's candles to see how they closed. So in this case, I'm not going to do it. I'll do it when I'm doing my analysis for the other pairs. Then I can see what I'm expecting this month. So for this case, I'm going to go to the weekly because I use the weekly every week to see how the weekly candle closed. So this week closed yesterday. So I'm just going to go to the weekly candle, to the weekly time frame, and see that is my highest time frame. So I want to go to my highest time frame and see. So when I come here, don't worry about the disorganization here because this was done on the lowest time frame. So on the highest time frame, it will look like this. So what do I see on my highest time frame? Let me first extend the things here like this. Okay, this one was here. Okay, so what do I see on my highest time frame? It is very simple. I see an uptrend. If you can just look at it, you just see this is an uptrend. People who use trend lines to find your direction, you can see this is a clear uptrend. Even a blind person can be able to tell that this is a clear uptrend. Good. That is the first thing you have noticed. Price is buying. Now, the second thing you want to do is, according to our rules, you want to mark your structures or supply or support and resistance or supply and demand. That is the same thing you want to do. So what do we see here? Do we see any supply and demand zones? Me, I can see. I don't know if you guys see. I can see a rally, a base, a rally. Then this is a break of structure. We have two indecision candles here. Then we have an engulfing candle. This is a clear demand zone. So we have a demand zone there. Let's mark it. You must be able to identify the things, guys, because they are going to help you. So you mark the demand zone there. Now, what else can you see apart from that demand zone? We want to look at if we can see possible support or resistance zones. Now, if I go to the line chart, this is what I always use to mark out my support and resistance zone, because the line chart is going to give you the clear turning points of the market structures. It's going to give you clear structures. The line chart, you'll see those V and A turning points. This is a, this is a V, this is V, this is A. You will see those clear turning points. Those are the areas you want to mark out. So after I've seen this, I'll get my support tool, and then I mark out this one here. So this is as a resistance zone. I'll just put at the top there like that. This is a resistance zone I can see. Then I'll just clone it and mark another zone here. Why am I marking here and not here? Because you see, you want to mark a point whereby you have many touches, because now here you have price was going up, rejected this zone, dropped down, broke out, retested on this zone, and then continue to the upside. So we expect that if price comes back here, it is likely to buy. Why? Because we have a previous resistance that turned into support and price went up. We have a demand zone there, and also we have a support zone. So trying to buy from here on the weekly is showing us very high probabilities. So we have now marked out our demand zones. We have also marked out our supply and resistance zones. So that is number 2 on the high time frame. Now the next thing we have to do is, okay, this one we shall refine. The next thing you have to do is drop down to the median time frame. That is rule number 3. Drop down to the median time frame. What is our medium time frame? Our medium time frame is the daily. So when I drop down to the daily, what do I see? This is what I see on the daily time frame. This is what I see. I see that we have the zone. This is the demand zone that we marked on the weekly. We can also refine this up to there like that. Refine the zone. This is the zone that we marked on the weekly, and now the zone cannot be as big as this, so we just need to pull it down like that on that level. And also this support and resistance, you can see that it is guys, it is overlapping. On the weekly they are just wicks, but on the daily you can see that this zone is here. Why do I say it's here? Because retested here, tried to fake out here but dropped down, then went up and came and sat on it clearly. So this is where the zone is on the daily. Sat on it clearly and then shot up. So what I want to do is, if I got the line chart, I think you can see that it is clear. Retested, broke out, ranged a little bit, come, sat on it, and then went to the upside. Guys, it is important that you get these zones correctly. If you do not get them correctly, it is going to be hard for you. The medium time frame is where you refine your zones. Now, after I've finished that, what do the rules say? Let me just extend them here. Where are they? They are down here. They are here. So okay. Okay, now we are good to go. So now, what is the next step? After you drop down to the medium time frame, what is the next step? The next step is number 4. You have now refined your zones at the medium time frame. The next step is number 4, confirmation from the medium time frame. Confirmation from the medium time frame. That is the next thing that we want. Excuse me, guys. So that is the thing that we want, confirmation from the medium time frame. So what is our confirmation? I told you the confirmation is any indecision candle of any sort on the support zone. If you look at our medium time frame, where is price at? Is it at resistance or support? It is not anywhere. It is in the middle of nowhere. So we need our confirmation zone, our confirmation only when we reach around this zone. Let me remove this demand. Okay, of course, we know that there is demand here. So instead of having a lot of things there, let's just use support, and I remove this. So you want to see that price has reached your support zone, or go back to resistance and look for these indecision candles. Price can decide to go back here, but when it comes back here, since this is the previous zone that price dropped, we shall be looking for these indecision candles to start selling. However, if it reaches here, we shall also be looking for indecision candles to start buying. Why? Because the weekly has told us there's a high chance of buying. Now we have come to the daily and we see a clear support, a clear resistance support zone. So we want price to reach our zone before we can look for confirmations at the medium time frame. So what do? We wait for price to reach down here. So I'll just play price forward. So price comes here and rejects here. Is this a confirmation? Me, I do not take this as a confirmation because price has not touched my area yet. It can just reach here and turn around, which is okay, but I'll not be interested in that trade because price has to touch my area, sit there comfortably in order for me to confirm, to take that as a confirmation. So I'll play price again. Now you see that the next day the candle that comes tries to touch the area and closes as an indecision candle. However, though I'm seeing an indecision candle, I'm not really convinced because I need to see price touch here, or if it does not touch here fully, I need to see another indecision candle before I drop down to the lower time frame. And you see, this is what guys you always misfire, because people want to drop the lower time frame so quickly and start taking trades. That is not what you should be doing. Instead, what you want to do is very simple. You want to leave the medium time frame. I think most of the work will happen on the medium time frame. You want to leave the medium time frame when you're absolutely sure that price has stalled at this level, and there is a real sense that price is not continuing down by showing you too much indecision at this level. Indecision is shown by indecision candles, because remember price has been dropping, big candles dropping. How comes that when it has reached here, which also happens to be our support zone, suddenly price is not continuing to the downside? This simply means that the sellers are now becoming weak and the buyers are coming in at this point to start pushing price to the upside. And remember, this is the previous demand zone. Look at these three candles and this engulfing one bar. This is three daily candles being engulfed by one green daily candle, meaning there's a lot of buyers at this area. So what you want to see is, you want to see weakness here, and this weakness can be shown if price sits here and starts creating indecision candles or bullish candles. Now price has come, but it has printed one indecision candle. However, it did not sit here very well. So for me to be interested, I need to see price come and sit here very well, or if it does not sit here very well, then I need to see and in this two or three indecision candles in this area before I can drop to the lowest time frame. Now before this happens, I'm not dropping down to the lowest time frame. I'm still waiting, because price can just decide to print this indecision candle and then the next day we just see a candle close down here. I hope you are together up to that. Good. So now I just want to see indecision here, so I'll continue. You see now the next candle that prints, it is a bullish engulfing candle. This is all that I need for my confirmation. This bullish engulfing candle is more than that I need for my confirmation. I can just enter from there, put my stop losses slightly below and target the upside. However, if I enter from here, though I'm going to get 100 pips up there, the stop loss is going to be more than the take profit. So I cannot enter from here. Now what I'm going to do, whenever I find such scenarios where the stop loss is more than the profit or they are equal, I go down to the lower time frame where we have rule number 5, drop down to lower time frame or entry time frame to start looking for entry triggers. So what I'm going to do, I'm just going to drop down to my entry time frame, which is the 4 hour. So now when I come to my entry time frame, which is the 4-hour. Where are our rules? Come here, boss, come here. Thing is hiding. So when I come back down to our entry time frame, which is our trend, and guys, have you been able to see how we've been moving from the highest time frame, working our way through the medium time frame to now the entry time frame where we have reached? Have you been able to see that? I hope you have been following. Now when I come to my entry time frame, I'm looking for triggers for entries. One, I'm looking for chart patterns, that is head and shoulder or inverted head and shoulder. I'm looking for double tops, double bottoms, or supply and demand zones with a breakout structure. Now in this case we are under a support zone, so we are looking to buy to the upside. So now what do I want to see? I want to see a head, an inverted head and shoulder, because a head and shoulder only happens at resistance. On support, we want to see an inverted head and shoulder, or double top or double bottom, or demand zones. So we are considering demand zone, double bottom, triple bottom, inverted head and shoulder, because we are at support. I hope you get me clearly. Now, this is what happens. We are looking for those entry triggers. So when I see a price action, price came and made a low, a high, a low, a low, a high, a lower low, and a higher high. This is counting like a QM pattern. People who trade, who know about the Quasimodo, this is counting like a QM pattern. This is a low, a high, a lower low, and then a higher high, signaling weakness in sellers. So now we have a very big demand zone here, and then this is like a left shoulder. I want you to take account of this. This is like a left shoulder with a big demand zone here. So what I want to do is I want to see a retracement, price retrace into this zone to create an inverted head and shoulder. This is a left shoulder, this is a head, to create now a right shoulder at around this area. And as it is retracing, it also tapping into this big demand zone that we have. So if I see that weakness, that is now when I'll be interested to buy this market. So let's play price forward. So when play price comes, taps into the zone, but goes up and then comes back again into the zone. So the moment it tapped into the zone here, you would be interested in buys. You can buy from here, or you can wait. You can opt to wait to be more clear. So when we print like this candles, let's wait. What do you see? When I got the line chart, what do you see? You see that this is now the right shoulder of this inverted head and shoulder. This is the left shoulder, this is a head. We make a higher high and then we come to make the right shoulder. Now, this is where I will be interested in entering the market. My stop losses should be slightly down here, which is around that 75 is much, but I know as long as I've gotten these details, I should be able to win this trade because all my rules have been followed. 75 is much. We can reduce it to this first entry, but I normally don't want to. This one would be a better entry, like there 43, but I normally don't want to enter with a red candle. At least I want to see a green candle like this one in order for me to get a confirmation that there is indeed buying pressure. So what I'm going to do, I'm just going to continue print my candles and see if I get a retracement to the zone to get a clear opportunity. So there is that one. That one can also give us a clear opportunity because it retraces. So now if you didn't enter from here, it was going to be tough for you to enter because price shot up again, but indeed it came back and retraced into this demand zone to buy the upside. But the whole concept is you enter from there, your target should be up here. Now you're targeting how many pips? This is 150 pips. This is 1:2.4. 150 pips to the upside. Now the next step is now the hardest and the easiest for other people. For me it is the easiest because I've set my stop losses, I've entered my trade, and I know where the take profit is going to be. So the next step is to just sit and wait. Sit and wait, guys. Let price action play out. Oh, okay, let's first use the first concept. Let price action play out. The entry trigger we have used is the inverted head and shoulder. So let's continue and see what price does. So price plays out up to our take profit. This time it even went through the zone to the upside. So if you held for longer, you would have gotten a 1:3 there. That is the first case. But you see how we have built it from the highest time frame to the lowest time frame. That is the first case. Now let's go to the second case. The second case we want to use is for demand and supply. So I'll just cut this at around here where we made our higher high. So the second case we want to use is demand and supply. We have used the inverted head and shoulder, so I want to show you how we can use demand and supply. In this case we did not get a double bottom, so but there was demand and supply. So now you see we have a demand zone here on the 4-hour, but the zone is very big. What do? We can, in order to minimize the zone, you can go to your lowest time frames like the 2-hour. You refine it up to here. The 1-hour, the 1-hour is not great. You see, you don't want to refine it so low, because most cases price, when the trend is so, it has high momentum, price is not going to reach down here. So you don't want to revise it so low, but let's just put it there and see what is going to do. So people who trade demand and supply, now this is your step. You want now to be following price action from this level, because you trade demand and supply from the lower time frame. You know that the trend has changed, it is now becoming bullish. You want to follow price action from this level. Look for only demand zones, mark them, and wait for price to come there and execute. So what I'm going to do is to continue playing this. So price drops at around there, but does not reach our zones. Again drops. Yeah, guys, I'm lucky. It reached our zone. On the 4-hour I could not see it, but you see it reached our zone, and now the stop losses are tight. We can use around 35 pips, and then we are targeting the next high, which is now 160 pips, and this is 1:1:2. Let me put this here. That is 1:4.9. And you see this one, we have used it with a demand zone on the 1-hour. On the 4-hour it was not clear, but on the 1-hour I didn't see it, but it was so clear on the 1-hour. So what you want to do is, you have entered this one using a demand zone. This is Aquas model, lower low, this is lower low, lower high, lower low, higher high, Aquas model. So, and you're also at a place where you have support and resistance, and you also have head and shoulder on the 4-hour. And even when you turn this is also an inverted head and shoulder on the 1-hour. So you want now to just follow price action as you look for more demand zones to be buying to the upside. So the first entry is here. So let's continue now playing price action. Price retraces a little bit and then goes up. There is a zone here, but this is not a zone I'll be interested in because it does not break structure here. So that one I'll just ignore it. But you see price reacted from it. Price reacted from it and it is moving. So let's continue. Oh, sorry, there was a zone here. I didn't see it. It broke structure here, and then there's a zone here. So that will be a second entry. But the problem I always have is one. The moment I enter the first entry, scaling in has always been a problem for me, because I tend to forget that pair and let it run as I do other things. But you see, this was a zone to broke structure here, even here, internal structure, external structure, and now it came back, retested the zone, and see how it is moving. So that would be your second entry if you're keen enough, but me, I'm not that keen. You see how it reacted very well. And then we have another zone here. There is a break of structure here. Very good move. So this is a valid zone. Let me see if price came back to the zone. Price did not come back to the zone, I think. Yeah, this was a good zone, but price did not come back to it. Now there is another zone here, but this is not one I would take. This one here, because it is near. Why I say I would not take it, let me just replay it. Why I would say I would not take it? Because it is near our take profit. But price reacted from it very well. You see, price reacted on it, they respected it, and boom, went to our TP. So price went and hit our TP and even went above it. Just like that, you have had 1, 2, 3. We had 4 demand zones, but only 3. Price managed to react from only 3. So just like that, guys, you have your trading plan which follows typical logical rules and also execution and stop rules. So this is how you trade in a professional manner. You don't just go to the market and then start trading. You look for things that are going to make you build a plan that has clear stops, clear targets, a very good structured plan that is going to give you guidance step by step on how to execute trades. And this plan has to be repeatable. You must be able to identify this plan in each and every market each and every market or asset you want to trade. If your plan is not repeatable, then just know it is not implementable. So guys, don't forget to subscribe to the channel, because I give you these clear trading strategies that you can be able to use in your everyday trading, and I'm teaching you premium content. So subscribe to the channel and be part of this amazing trading community. Also, if you have learned something from the video, do not forget to like the video for the algorithm. I hope you are together up to that. So join my Telegram group just in case you would want to learn how to trade, or you want to ask me something about anything. Just join my Telegram group. I also have a book that I wrote about this strategy and how you can scale in using different amounts of capital that you might have. You can also order for that book on my Telegram, and be able to give you for the first 1,000 subscriber. If you're a subscriber, the book is $10, but if you're not a subscriber, the book is $20. Initially it was 30, but people complained that that was too much. They could not afford it. So those are the prices now. So I think that is all. You can go through the video step by step and you'll understand how to walk around in the forex market, how to use this strategy to identify structure, and how you can keep on scaling in. And guys, someone will ask me, what is the win rate of this strategy? This strategy, the win rate is 90%. 90%. If you follow what I've told you step by step, the win rate is 90%. Of course, it involves you ignoring some signals that you see these are not clear. The things have to be clear. If they are not clear, ignore them. I have told you the win rate of this strategy is 90%. If you dispute it, take it and do your back testing and come here and give us the results that you have gotten. So that is all, guys. That is all for today. I remain Hassan, your boy who is giving you premium content. I'm going to end this video from here, and then we shall meet tomorrow for another analysis video like this one. I know there are a lot of trading channels on YouTube, but guys, you're not going to get many trading channels that are going to give you a breakdown of strategy step by step the way I do here. So what you can do now, I can recommend you some trading channels that do the same things I do. There's a channel that trades mainly supply and demand. It is called GFX. That is a very good channel. I learned supply and demand from that channel. And then there is another channel that teaches top-down analysis. I think that is ZewaFX, and then Dapper Williams. Good top-down analysis. You can also try a channel called the Trading Channel. I don't know that guy's name, but he also teaches step-by-step strategies that you can adopt into your daily trading. Just like for him, what I found as a downside is that he trades on the 4-hour time frame as his highest time frame. I think a daily and a 4-hour. Then he also sometimes uses some indicators for. I got to know about RSI from him, and also the ATR indicator from him. So you can go to those channels and see what you can get. So that is all for now, guys. The video is already long. We shall meet in another one tomorrow. Bye.